Hey traders, so it's Sunday evening here in the UK. It's just gone 8:30. I thought I'd do a little bit of a review of last week, a market review. This is where we get a chance to look at all the trades we missed and feel shit about it, and then look at the trades we took and realise we could have stayed in longer and feel shit about it. And yeah, basically just take a beating before we start the next week. So let's start off on the second. Monday was a bank holiday in the UK, so I'm going to start off on the second. Don't think I took any trades on the second. Let's just put on my markers. If you don't know how to do that, you just right click data series, change do not plot to markers. There, stick that on, and we should be able to see. So let's scroll across. There's the London Open here. London Open drove us, looks like it drove us down. So we were drifting up. Through the morning up here, and then somewhere around there we decided to go down. We didn't go down very far, so we stuck in this really tight range all the way up until the New York Open. So basically, and then we nosedived. The market took a complete shit and dumped its ass. So were there any clues as to the direction? Well, hindsight trading is brilliant. So so we can have a look and we can see, and you will be able to see this if you have a look at the bottom of all of these swings. You'll see negative numbers, negative. There's one positive, negative. And if you have a look on the top, in a normal market, it'll be positive, negative, positive. And these, you notice from here on, the positive upswings, they're getting smaller and smaller, and then we hit this negative, and the negative ones are getting larger to this point here. Right, so that's one point of confluence. Second point of confluence is we pushed up here, which is that block there, and then immediately we push straight back down. So it looked like the market didn't want to go up. It didn't make a new high. Okay, we've got high there. We haven't got a new high. We're making lower highs. We're actually making lower lows. If you have a look here on the histogram, demand is drying up. Okay, and then supply is kicking in more and more. We get this imbalance here. Just before the open, but then you can see we actually break these lows, and that's important. So we're making new lows, we're getting signals we're going lower. We break this low here. Also, this is also very important, what's going on here? Well, there's fuck all going on positive, and there's a lot going on negative. Okay, so that's kind of like a little bit of a clue as to where we might go. And then we break this low, we push back up, we don't make a new high. That is lower than that. Exhaustion, stooges with trend, stooges, negative on the upswing, and then we sell off and we shit the bed. And down it goes, and that is a very good trade. There's probably quite a lot of volatility on there. You might want to take that on the Renko or the ranges, just so that you can get your stops. But I mean, if you're looking at, if you put a, what I would tend to do is I would put a trend line in. So if I think the market's making lower highs, then okay, that's my thesis. That's what I'm going with. So if it makes a higher high and it's above there, then I'm wrong. Okay, and I can get out. Now the good thing about it's difficult because the POC has stayed like that all the way through, at the time you may have been able to put your stop above the value area high. You could put it above this trend line. If you sold off and broke this low here, break this low here, then you could, if you wanted to, start putting it above these swings here. But obviously the market moves very fast after the open, the New York Open, and then we kind of bottom out, and then you see, yeah, you see supply is drying up. I mean, demand doesn't kick in right away, and you drift up a little bit, and then you see some demand kicking in, some more demand kicking in, supply drying up even more, and that's when you go up, and then we're going sideways, and then we're into the evening, and you don't really know where it's going to go in the evening, so it's probably best to be out at this point if you're still in. So that was May the 2nd. Let's go May the 3rd. What happened on May the 3rd? Let's just bring this into focus as May the 3rd. Right, so that is basically from midnight right through till 1 in the afternoon, and there's a really tight range there. We're going sideways. We're not really picking a direction. What's going on here? Well, we've got quite a lot of so this is early in the morning. We don't trade this. We don't trade this at all. So let's look at the open. Let's bring it into the open. Let's go. Get rid of that. Let's just get rid of that. Remove that. Let's go 8 o'clock and see where we go. Yeah, okay. So again, the open pushes us down. London Open pushes us down. Then we recover from that, and then we drift up. There's probably some news there. Yeah, I traded this, didn't I? I've done a video about this, so if you have a look at my my videos for May the 3rd, you'll see that I've traded this. Could I have done any better? To be honest, yeah, this went into the evening, didn't it? Okay, so I started trading a little bit of chop through here. Have a look at the video for the 3rd, and then we tried to push down. We stayed within the value area. We pushed, and then we pushed up, didn't we? And so the reason I was long, I think you'll find in the video, is supply is drying up, and then demand kicks in, and I'm already at this point. I'm already long. Oh no, this is the break of here, isn't it? It's the break of this level here that I'm long, and then I take it right up to here. Could I have stayed in longer? Well, the market pretty much reversed and then bounced and went a little bit higher, so I was right to get out. I mean, the reason I got out is in the other video, but I think if we, yeah, I started seeing this coming in, and I started seeing M-Pace kicking in as well, the red M-Pace, and it went above that green, and I thought, yeah, that's me done. And we were getting into the evening anyway, and I'd been trying to trade this chop, and then I was in here, and then we went up, and I thought, right, that's it, I'm done for the day. So that was that day. I mean, when do we sell off? We sell off 8 o'clock, 9 o'clock at night. So if you're in the US, trading late into the session, you could probably have traded that sell-off. Again, look at the volatility. It's massive. Are there any clues which way the sell-off's going to go, or if the sell-off is coming? Well, if you look through here, yeah, that's all chop. But if you look here, you're slowly grinding down, okay? And at that point where this kicks in, you're actually going negative. You get a negative print on the upswing. These are diminishing as well. So you've got 254 on the upswing there, and then you've got 14 on the upswing there. So that's a higher high, right? But your delta is lower. So you've got diminishing deltas on the upswing, and then you get your signals. You probably, that's quite a sharp sell-off. So again, you've got signals down here. That's probably a better signal there. So you've got pullback and stooges with trend, and then you've got a negative there. And then by that time, you're right into cumulative delta negative, and you've got this. This is massive. Look, there's just no demand whatsoever. So yeah, that's a decent trade, but it's in the UK. It's too late. I'm not going to trade that. I'll be frazzled by then, frazzled by the evening. So, but if you're in the US, you can trade that, obviously. So that's the. I didn't mean to lock that. Let's get rid of that shit. Horse shit. Right. Let's move on to the May the 4th be with you. Star Wars Day. Bejeez. Let's go straight to the Open. Let's go right to the London Open. London Open, 8 o'clock in the morning, and we get so we're selling off into the Open, and then we get this massive push up. It's massive push up here, and then we start selling off into the late into the session, and we carry on all the way through past the US Open. So what clues do we have here on what we could trade? And let's go back a little bit. So is there any clues for this? There isn't really, because look, if you have a look here, there's no demand, right? There's no demand right up until this part here, and then you get this massive influx of trades. Pace of trades goes ballistic, and then you flip your deltas, right? But up until that point, you're kind of yeah, it looks a bit negative to me, and then you pop up, but then let's have a look and see if there's anything that would indicate we were just going to carry on south. So let's bring this across a little bit here. So there's the push up. Do we get do we have any clues here? So we've kind of got diminishing deltas here. So if you have a look here, so you've got 143, then you've got 18, then you've got 44, then you've got 11, then you've got 13, then you go negative, 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 negative. These are all negative round here, which is expected. Yeah, I'm not sure you would get any signals there. The only thing you've got, if you wanted to play level, so if you were playing a break of this level, you could have a look at your demand there and say, look, there's nothing there, but we're still cumulative delta positive. But as soon as that goes negative there, and you break that level there, you can go short. Okay, and then you put on your trend line, say what's going on, and then you've broken above there, so you're going to be, it depends, yeah, it depends. So at that point you haven't broken that trend line, so your stop would be above the trend line here, above this swing high. You've come through there, that gives you a chance to reevaluate and see what's going on. You can see this demand coming in here on the inbox histogram. You go through the MAs, you go sideways, but you never really go cumulative delta positive. So you can hang on in, you know, if you want to see what the market's going to do, you can hang on in. Your stops above here. And then you can wait and see what happens, and then when you're back below this area again, then you're kind of confident that, and you're below the MAs, that you're going to carry on a little bit. It's just about managing the trade, really. again, you've got a new high here, so then you can move up your trend line and move your stop down from here to here. And you carry on down, really. I mean, we stay cumulative delta negative all the way down here, and there's very, very, very little demand coming in. You've got loads of signals on the top here. You've got stooges, you've got negative deltas on the top on the up waves, and you're getting some nice numbers on the down waves. Yeah, so you could have stayed in that if you were in it. Well, that's how you could have stayed in it. Whether you would or not is a different matter, right? Because execution is everything. If you're shitting yourself thinking it's going to bounce back every time it breaks through the MAs, then you're going to be out. But you got there's plenty of signals coming up, so you could get back in. And then right down to about an hour after the open, when we see a rotation. How do we know we finished? Well, cumulative delta goes positive, and you start seeing wedges of demand kick in, like all across here. You're seeing all this demand kick in. So yeah, there are some clues. M-Pace kicks in here. So that was the third, sorry, the fourth, and then the fifth. I think I traded the fifth, didn't I? Right, let's go right across here. 5th of May. What have we got here then? Well, that's shit, isn't it? 5th of May, right, let's go there. I traded this. Could I have done any better? Well, it was sideways all across the morning. Yeah, that's garbage. If you have a look here, so I think I was trying to go long, or was the market trying to pick a direction? I don't know, but if you have a look, I mean, hindsight's brilliant, yeah? When you're trading it, it's fucking completely different. But so you've got that, and I think my bias was long based on the higher time frame. You'll have to have a look at the video from the 5th. I've done one from the 5th, so I'm biased long anyway. And yeah, I'm in here and I get stopped out here. I would take a break even, don't I? Because it grinds all the way up here and then it pushes down on some news, doesn't it? There was a print. I can't remember what the print was. Was it 5th Friday? Was it? Would have been in it. No, it was NFP. Was the evening, wasn't it? Oh, I can't remember. My brain's frazzled. But we were pushed down, and it's all in the video. And then what happens is, if you get pushed down, you've got a long bias. You get pushed down, you get stopped out. Half a mo. Within, I don't know, 5, 6, 7 candles, we're back in the same range. Okay, and then you start getting your positives on the downswings, and you see your upswing numbers are increasing and your downswing numbers are decreasing. And did we get any proper signals, or did I just play? I think I was just playing levels here. Yeah, I've got another break even there, and then I'm back in. That's right, we pushed down again, and then I'm right. It was back above the POC, wasn't it, or the value area high at the time. And I go long, and then I stepped away because I thought, well, I can't be asked to watch this, and I stepped away and I came back and it's gone to target. So I had a 200 tick target in my ATM setup. That's pretty good. I sometimes do, you know, if I'd have been here, because we're so far away from the MAs, and look at these blocks of demand kicking in, I probably would have moved my stop up and followed it up and moved my target. I would have moved my target right up, and then I would have followed it up. So I could have traded that better if I'd have stayed and watched the trade. That's, you know, hindsight's a brilliant thing. It's always when you go for a coffee, you go for something to eat, you go to the toilet, and you come back and something's happened. You wait all day for something to happen, and then it happens when you step away. That's fucking trading for you. So, you know, get used to it. These things happen. We move on. I could have got back in. Did I want to? Not really, to be fair. A 200 tick trade is pretty fucking good for a day, so I called it a day. Yeah, and we continue right the way up, and you're getting signals all the way up as well. Getting a few negatives there. Is that? Oh no, that's up thrust and pullbacks, all positive, but diminishing positive. But then we break above that and we carry on up. So we could have traded Friday better. There you go. It's one of those things, isn't it? I get to feel shit about that for the rest of the day, and then we go again tomorrow. Yeah. Okay, so that's my market analysis of this week, and my trades that I've taken, and the ones that I should have taken, and the ones that I could have taken, and the ones that I should have stayed in, and the ones I should have managed a bit better, but I didn't. And there you go. That's the end of that. Thanks for watching. If you liked the video, like and subscribe below, and we'll do some, hopefully I'll get some, no, it's bank holiday tomorrow, so I'm not sure if I'm going to trade in the UK tomorrow. It might be Tuesday again, so we've had 2 bank holidays in a row because of the coronation and the May Day bank holiday in the UK, so the national holidays. So I may not trade tomorrow. I may do another market review of tomorrow and then do some trading on Tuesday. Okay guys, like and subscribe below, and I'll see you in the next video. Cheers.